QE has nothing to do with derivative markets directly. Quantitative easing right now is nothing more than the Federal Reserve putting money into, number one, they're buying our debt again. In 2009 and 10, they bought $4.2 trillion. They still are, even before this started, they still were our number one debt holder. Now they are back to buying mortgage-backed securities and other bonds. They're also putting more money into the repo market. It would take me way too long, and I don't know how to simplify it enough to make sense, but it is what banks borrow from banks. Banks borrow money from banks in hopes of in an overnight or a week, they can earn a little bit of interest on that money. Now, the Federal Reserve on Sunday added a 1 month repo, so they can actually hold the money. They can borrow the money for a whole month now. Used to be just overnight, then it went to a week. Excuse me, now it's 1 month. So that is putting money into the global system. Well, why are we putting money into the global system? Because without a constant, consistent flow of money, or in terms of the markets, liquidity, in other words, if a bank decides that they are selling their treasury bills, the money has to be there immediately. It has to be liquid. We have to maintain liquidity. If we don't maintain liquidity in a lot of other areas like repo rates, banks will start selling treasuries to create some liquidity, and that is going to put a burden on our debt market. So that's what they're doing right now. Derivatives are going to be market driven. So if banks get into trouble, it is going to be a problem because their derivatives aren't necessarily equity. It isn't like a stock that they can sell. It isn't like a bond that they can sell. It's a bet. It's a bet with somebody else that something is going to go up or down on a certain date. So they're locked into that date, and they're locked into whether they can win or not. And if they don't, so all of those that had bets on, I'm using the word bet, I probably shouldn't, but all of those that have bets on that this is going to go up on April 30th, guess what? Nothing's going up on April 30th. That's going to now default that derivative. It's over with. They lost. That's money gone. Well, what do? Suppose they have, I don't know, $500 billion that does that. Where are the banks going to get $500 billion? Well, they got to take it out of their other liquidity and real equity. The bank's going to get in trouble. The derivative markets now are really in trouble because now they're not getting paid off. So the person they made that bet with, they're not paying them off. They're not going to be able to. The system is going to fail. If the system fails for one bank that's in trouble, I don't know, pick a bank. 2 years ago, I was worried that it was Deutsche Bank. I talked about that the other day when I said Angela Merkel said she wasn't bailing them out on a Tuesday, and I laughed about it. And I said, folks, don't worry, it's not an issue. Because everyone said, well, she can't, what happens if this? I said, it's laughable. She's going to bail them out. It's not, she can say it all she wants. Well, on Thursday, she bailed them out. She said it on a Tuesday, and then on a Thursday, she bailed them out the same week. I mean, it can't happen. They can't let it fall because it'll be like dominoes. and it'll mess up the whole system. That's a worry. Is it going to happen? It looks less worrisome now. It's not concerning now because of some of the steps that the Federal Reserve has made, and I not just them alone, but central banks around the world have been pretty much in unison about doing the same thing. That's been a very, very good thing. It's been a very good thing. Hey, remember to click the subscribe button right here on the screen, and don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.TV. That's FISM.TV.